I'm David Yerger. We're going to do introductions here real quick and get this thing started. Commodities on the blockchain are really interesting to me. I work for Redwood Digital Group. We're a hedge fund trading what we believe to be categorized as commodities on cryptocurrency networks. So we trade. We do a number of other things as well. Previously, I worked at BitGo, and BitGo is a company that you guys have, many of you have probably never heard of. Some of you have. And we did a really interesting project with CME Group and the Royal Mint. And this was tokenizing the gold that's in their vaults to ounce to a token security or token commodity. And that token can be sent anywhere out in the world, and it lowers the cost of moving money around the world. It makes it more efficient. It's a lower cost. It's less frictionless. You don't have to do the insurance and the physical delivery of the assets. You have to do all these things. So that was a really unique project. We're working with, this is the Royal Mint, a 1,000-year-old institution, and this is CME Group. These are big names, and this was a year and a half ago. I think one of the reasons they invited me to be up here was 2 years ago. I spoke on the tokenization of everything, and much of that was talking about commodities. So we're going to get this panel kicked off. I just want to get your brains thinking about this space and what can be applied, how commodities can become tokenized. We're going to talk about blockchain technology, distributed ledgers. We're going to get into all of it. But first and foremost, let's introduce ourselves. Mark?
Thank you. My name is Mark Pryor. I'm the CEO of Memphis-based The Seam. And The Seam is a commodities trading and software company. So we operate a marketplace for spot cotton trading. And we've done that since the year 2000. We're branching into the blockchain world with the tokenization of bales of cotton, and also to address some of the inefficiencies and opaqueness of the supply chain in agriculture.
Hi, my name is David George. I'm the Chief Commercial Officer of a company called Expansive. Expansive basically extracts, refines core source data for commodities. So for example, you could take a MCF of natural gas production and we create a fully cryptographic and attributional profile for each unit of a commodity that's provided. That could be in the egg space for, let's say, deforested soy, or it could be a barrel of oil. And each one of these commodities has a full attributional profile for all the external pieces that go along with it. So that could be low methane production, low carbon production. That could be flaring efficiencies. It could be all these things that either cause a margin issue or a top line issue out in the market for many of these commodities providers, and also issues for the planet as a whole. So if we talk about methane output, et cetera, these things are currently not being tracked. So we have a full analytics capability behind this, operational intelligence, the ability to basically create very compacted times to settlement. But also what it does is we provide something called digital feedstock, which is that attributional profile and representation, which is blockchain powered. And we basically give commodities providers a way to decommoditize and differentiate a commodity, which is by definition a commodity. So literally now they have a way to differentiate their product through production level efficiencies and create value on top of something that was volume driven before.
My name's Chris Ginsbach. I'm with Carbon Creek Energy. We are a natural gas producer headquartered in Midland, Texas, but all of our operations are up in Wyoming in the Powder River Basin. One of the jobs I was tasked with when I was first hired, other than tracking cash flow and management and forecasting and financials, was, hey, go find, we think we've got some pretty unique features about our production profile and how our gas is extracted, especially compared to some of the new shale plays, if you guys are familiar with what's going on the East Coast and the Marcellus and Pennsylvania area, and also obviously in the Permian Basin in Midland. We do not have to hydraulically frack our wells to get the gas out. And so as we're all sitting around brainstorming on this, we said certainly there's someone who would, or there's a way that we can try to capture that different production profile or lack thereof. Even though the gas coming to the market is the same as everyone else's, we have a different way that we're extracting it. And so that's how we came across Expansive. And kind of the bottom line there is, if we're all getting paid for the same thing, but it's either costing us more to get something out of the ground, a cleaner way for the environment, and a way that can actually repurpose some of the water that we are keeping clean or keeping pure, then we would have tried to take advantage of that. And this technology, with the blockchain certainly seems to be a way that we can get an additional product to market based on the attributes of our natural gas and our production facilities.
Hello again. I was lucky enough to have a demo just before this, so hopefully some of you saw that. So I'll keep my introduction relatively short. My name is Brian. I'm the co-founder and president of SeedCX. We are a spot and derivatives commodities exchange. We offer some other services, but by and large, that's the most important piece and most relevant piece for this panel.
Great. So some of you guys are looking at cryptocurrency, some of you guys are looking at blockchain technology, some of you guys are looking at distributed ledger technology. Let's talk for a second about how you're looking to apply what to your operations.
Okay. Well, to take the agriculture side, if you eat food or you wear clothes, you're impacted by agriculture, right? Yep. It's everybody. And the thing is, it's a very antiquated supply chain. There's not a lot of tools, there's not a lot of standards, there's not a lot of interoperability, and that causes some real concerns. There's some big movements in the demand for traceability and transparency for agriculture. And one of those is driven by food safety. You've read the news, you pick up the Wall Street Journal, there's an outbreak for romaine lettuce, I think listeria.
That's right.
And you look at some others, I think there's some eggs. There's a lot of recalls that are going on for agriculture-based products. And we need to use this technology to give us the provenance that's necessary for conveying the supply chain and where the journey of these goods as they've made their way to the consumer. There's also a real strong need towards fiber authenticity. We talk about clothing. I'm wearing Levi's here, but you could have Egyptian cotton sheets that you buy from Bed Bath & Beyond, or Pima shirts from Brooks Brothers. You want to make sure that those products really are authentic. And the only way to do that is with transparency and traceability for the provenance of the goods. And it's it has been a problem until blockchain has come out as being a great tool in the toolbox to solve this problem, because there's so much inefficiencies. There's so many, and there's so many different systems that are out there that you can't simply provide that kind of information that's needed. So what we're looking for blockchain to give us is that traceability and transparency throughout the supply chain for food and fiber in agriculture, and we see that as being a very key component. And aside from that, the efficiencies that'll be gained by the many, many players that are in that supply chain to have a shared source of truth is something that is absolutely revolutionary in the industry.
Yeah, so there's not a lot to go from there. I mean, commodities overall are, when you say antiquated, it's really interesting in that the data that's actually provided, there are some up-to-date systems, but what's really interesting to me is we found that the data that has actually been encapsulated from an operations perspective for multiple commodities has then not been represented to any type of business value. So an operational person will say volume and flow, let's say for gas or for oil, and that volume or flow will be a straight prediction for volume-based pricing in the market. And so the interesting piece is they have not been using all this core regulated data that they have to basically, that's available today to basically, transition their business to the next phase, because right now they're dependent on market-based factors. And so what we found is now when we represent this data and we create this attributional profile that can then be basically aggregated, proven, and then turned into differentiated product, that it changes the whole business profile for companies such as BP or other providers like Carbon Creek. And that data then becomes a source, basically not only a source of truth, but it becomes a source of management for the company. And one of the tenets and one of the things that we're trying to change in the market, and I've seen this over 6 years working in blockchain and emerging technologies, is when you're creating a model behind the technology, it's not the technology that's the hardest thing to get adopted. It is the business process re-engineering that has to happen behind the technology across the companies. So the number one thing that we're trying to do is get mapped outcomes for the tech. And so that really boils down to business outcomes, like Mark just said, which we're trying to adapt the technology to. So in essence, I don't really even talk about blockchain when I'm out in the market, even though I've been in it for 6 years. Literally, we talk about the business outcomes and the impact first, and then we talk about the technology enablement second after we go along. So,
yeah. And I can add to that because, you know, we were looking at this from a very high level. I mean, when I started this, I didn't know what blockchain was. We started making phone calls, you know, 2016 on, hey, are there any companies out here or processes out here to try to do what we're wanting to do with our unique production processes? And the answer that came back was, yes, we can help do that and we can help get you there. But it's not only, you know, the fact that you don't have to frack your wells, you also are repurposing water back into the environment there in Wyoming. So if we were not doing what we were doing, the farmers and ranchers there would not be able to increase their yields on their crops and increase the cattle that they're running, because the water, because we're keeping the water clean, we're utilizing fresh water that's already underground anyways, and we're repurposing that, and we put it straight back into the river, into the Powder River. But for some of those landowners, they want it to run through their land first so they can irrigate their crops and help feed their water and feed their cattle. So that's an additional attribute that's on top of it. Or there's some other individuals or companies that may have, you know, water conservation goals that they want to try to achieve as a company. So it's opened up the data that we have. They kind of helped us hopefully unlock a lot of other avenues that we can try to, you know, try to monetize from the standpoint of it's not just it's not the blockchain technology. It's helping us as a company realize what do we have and how do we get that out to market.
So if you did see my demo, you probably saw that we're focused in offering a trading platform for cryptocurrencies, commodities, crypto commodities. However, our roots, pardon the pun, actually come from agriculture. Seed is 3 years old, and we originally started with a focus in producing a trading platform for emerging commodities, and that included agriculture and cryptocurrency. And it was interesting even at that time that for particular products that are not well understood but regulated in a complicated way, that already had the semblance of components of a blockchain, chain of custody, but just not decentralized. And I'll give you an example of that was with industrial hemp. Industrial hemp is a complicated regulatory, has complicated regulatory status and has a very strict seed to sale requirement, which means you can track the seed or the plant all the way from seed to sale. So the way they do this is they plant the seed and they put in all of its defining characteristics and essentially hash that data into a unique hash. When the seed sprouts, when they water the seed, when they move the plant, and they new information together with the previous hash, so at all points you can retrace the entire history of the plant and ensure that hemp, which is complicated from a regulatory status, has a clearly defined history. So the obvious evolution of that when it comes to decentralized ledger technology is to provide that back out to people, to regulators, to distributors, to Whole Foods who wants to sell hemp products. How do they know it's actually hemp and not cannabis or marijuana, where it is a complicated regulatory distinction? And so this was a really interesting kind of first entrance into the kind of blockchain and distributed ledger use case when it comes to chain of custody. Now, Seed is focused in digital commodities, and I think one thing that's important to note there is that just because you put something on a blockchain or you digitalize an asset, it doesn't really define it as a commodity or a security. We're focused purely on commodities to maintain that same approach, but we've kind of been watching this from a couple of different assets, I guess, so to speak, within the commodity space, and it's been exciting to see that growth.
So switching gears here, we're going to talk about smart contracts and commodities. For those of you who don't know, the most basic form of a smart contract is like an IFTT statement. If this happens, then that in code. So for each of you guys in what you do, how are you guys looking at smart contracts? How might they apply to what you're looking to do? Do they apply at all?
Yeah.
Well, let's open that up.
Okay, that's a great question. And in a lot of these conferences, there's such a confusion about the name smart contract, and you immediately think contract is legal agreement. And I've even been in some conferences where you have a room full of attorneys and they're being told that they all need to learn how to code. And I don't agree. I think that there's a difference in the definition. There's what's called a Ricardian contract, which is more applicable to the legal agreement that we all know. That to take this legal agreement that we know today, with legal prose, turn it into human and machine readable code, and apply digital signatures to it, that's your Ricardian contract. Smart contracts are simply the execution. So if this, do that. And to your question earlier, where we see the smart contracts really coming together is one, it's going to require industry standards to create what these definitions of these instruments are that you're trying to automate. And if you don't have that, the real value of blockchain technology and that interoperability goes away. So although these proof of concepts may involve 3 or 4 people, we know that 3 or 4 people is not what you're after. You're after 300, 400 perhaps, or thousands for the ecosystem. Where we see blockchain and smart contracts working in our particular case is, imagine a journey, a shipment of cotton that's going to China, and you have the Ricardian contract that stipulates the rules that must be met in order for payment to occur. But the triggers that happen with smart contracts are such as when the goods arrive at the port as verified by the port authorities, then perhaps you provide visibility to the documents and data that's stored on the blockchain. Or perhaps you release a certain amount of funds to the other party in exchange for certain events that occur throughout its journey. I think smart contracts will be an absolute game changer, but I think the education in the industry is needed to kind of differentiate what really is a legal agreement and what's simply an action that's controlled by triggers, by events that happen.
I would have to agree with that. Smart contracts, otherwise known as an app layer, to any of us old timers out here in the market, really just are functionally either Solidity or Rolang or whatever language you use with a smart contract rolled into your app layer. And if you really want to think about it, it's electronic document management on steroids in a certain way. So when we look at it in that fashion, we utilize it a couple different ways in our platform. One is because of the regulatory nature and the need for certifications in our particular market across commodities, we're actually automating what we call smart standards and smart certifications. And so we take the source data, the data at the source of production, all the way down to the unique ID profile, and we'll track that all the way through. Well, one of the attributes of that unit of production and all those attributes might be that they're certified through that certain well or that certain farm. And so we're automating the process at the smart contract layer for certifications and standards. So you may have a low methane standard that might be a global standard. It might be a provincial standard up in Canada. It doesn't matter. We can automate that literally at the smart contract, the Apple layer, and then that can be processed all the way back to the source data. That's hugely important for companies that need to automate because they're in a regulatory risk, and so to risk mitigate on their side if they have an actual source of truth for that data back to the certification, back to the unit of production for the wells, hugely important for them. That's number one. Number two is these attributional profiles that we're presenting for a unit of production for a commodity then becomes a differentiated product. So if you decommoditize an underlying commodity, that commodity becomes then a digital title of itself, and those attributes are broken apart from a unit of production, and those can become a trading instrument. So the markets, the exchanges like this, the traders like this, because it basically extends their ability to trade. And it is functionally all the way back, tracked back all the way to the source of production. So you have a source of truth that can be traded against in the markets, and it's a differentiated product that hasn't been available before. So we're really utilizing the smart contracts in that regard to get to both of those areas, tokenizing all the attributes.
Yeah, I'd say our experience with contracts historically has been, we have all of our production that comes out of the ground on a daily basis, and you sell that production to counterparties. For example, BP, they may buy a certain percentage of it, and then they may go back out to the market and resell it to someone else or transport it through the pipeline system throughout the United States. Because our gas is going into interstate pipelines, it's federally regulated, and so there are federally mandated contracts that everyone has to enter into when you have these counterparties. So if we're going to try to do any sort of smart contract on our production, we've got to get the federal government involved to get that language that's already in a paper document and somehow get that over on the automation side. And I was actually talking with a gentleman earlier who spoke up at the other speaking side on the crypto, who said they're doing just that. They're talking with that federally regulated board about how they can start automating those contracts from that standpoint. So that's one side of the contract. So the other side is, okay, now that I've sold my gas to BP as an example, how do I get it to them, or how do they direct where it needs to go? So as our gas comes out of a certain part of our field is so big, about 60 miles by 90 miles, it can exit the field in 3 different areas to 3 different types of pipelines or production facilities. And we've got to be able to talk to and say, okay, BP needs 1,000 MCF going this way north, they need another 1,000 going east and another 1,000 going south. Well, right now, that's literally phone calls between our field guys and our scheduling department of saying, okay, I need to send 1,000 to BP. Even though we have meters at all of those locations, they should be able to tell us that we have enough gas to go. And we also have the contracts to know that BP is asking for that much. So why are we still so antiquated that we're making phone calls, even though we have all of the data there and we know how much needs to go? The reason why the phone calls matter is, let's say we have bad weather and I'm not flowing 1,000 north, I'm only flowing 500. So then a phone call comes up and says, hey, I'm going to be short today, I'll double up tomorrow, I'll get you your 1,500 tomorrow. Well, the phone call doesn't need to happen because, again, it's all metered. So that's something that can definitely be automated. And I don't know if that's, I think that falls under your definition of a smart contract. It's not really a contract, it's more of automating the entire process. And that's getting to an education and to an understanding of getting all the people involved and getting them on the same page to the next level. One of the favorite sayings in the oil and gas industry is, well, that's not how we've always done it, so we're just going to keep on doing it this way. It's pretty refreshing to come to a place like this and say, well, let's figure out how we can do it differently and more efficiently. So it's definitely been a learning curve jumping into this stuff for sure. Good.
So from an exchange perspective, smart contracts are kind of interesting, but in large part when it comes to settlement, smart contracts are kind of in existence already. We actually call what you trade on an exchange a contract. It's pretty common terminology for derivatives exchange. You are entering into a contract to buy this product at this time, and if certain criteria are met, you receive the product. And when it comes to settlement or that mechanism, what happens if something interrupts that flow? So for example, if somebody defaults, what actually is the trigger? So those are pretty defined mechanical operations. If somebody defaults, you settle a portion, or you settle according to an index, or whatever. And so we have defined all of these as operated and automated processes, and those are already constructed as essentially smart contracts. Your settlement and your trade is automated essentially from start to finish. Now, when it comes to blockchain and distributed ledger, that's really where you want to remove the centralization of that process. Currently, our entity who does this is Zero Hash, but what you would want is a distributed ledger of smart contracts, each one maintaining the initial margin for the trade, the collateral, the understanding and the logic to default a trade and what it should do in that instance. A lot of people are working on that. I think the complicated part is that whole process is essentially clearing, and clearing by definition is the definition of a clearinghouse is a central counterparty, CCP. So to have a decentralized central counterparty is sort of a contradiction by nature. So there's a complicated regulatory change that will need to occur in the clearing environment for this to really be viable from a regulatory perspective. But from a technology perspective, exchanges and settlement entities do this already. Zero Hash does do this, we just don't have it decentralized, and I think that's really the exciting question, and that's just about bringing up, just investing more time into that technology, which is what we will be doing.
So we've talked a lot about where we are here now. Many of you come here because this is a technology that's emerging, right? It's not yet fully formed. It's going to iterate. It's going to change. So let's say we get invited by Distributed 3 years from now to come back and be on the same panel. What are we going to be talking about? And what's going to have happened as it relates to commodities and the blockchain?
Those are really great questions. I wish we had that crystal ball, but I think several of the panelists that were here earlier hit it pretty hard. Decentralized applications are going to be the norm. We operate a clearinghouse, so we're the buyer to every seller, the seller to every buyer, and we've been doing this for 18 years in cotton, and we're going to disrupt ourselves. We're going to connect the buyer and the seller, and we'll be out of the way. That's going to take off, and it's going to take off in many industries, not just cotton, not just agriculture, and we'll help usher that in. So I would say you're going to see some true applications that are out there. This technology blockchain, they say it's going to be a couple of years out. It moves in dog years, right? I mean, it truly has taken off. So I would say you're going to see applications in production now, and there already are some, but we're going to see a lot more decentralized applications, peer-to-peer trade, bilateral trades with the activity etched on blockchain. So I really see that, and I see some efficiency brought to, in our case, the agriculture industry that we haven't had before, by having a single shared source of truth with companies that don't trust each other sharing the infrastructure. They're warming up to it. They had to warm up to the internet, as we all know, back in the day, and I think we're going to see it sooner rather than later.
I would just add on to that I think one of the interesting things that we're already seeing a shift. There's not been the ability to decommoditize underlying commodities. So what this means is again, there's wholesale business process changes coming to the commodities industries, whether it's oil and gas, whether it's ag, right, whether it's metals. It doesn't matter, because now you have the ability to productize. So there's going to be this wholesale change that is both financial and operational in nature. And the financial change that's going to be coming is the ability to differentiate the products. So companies like BP, Shell, Statoil, right? They're going to have to actually bring expertise in from across the industry to learn how to basically run products, differentiate products, and sell products on a global scale. I think this is going to be a wholesale business change for these particular industries, and it's going to be very interesting to watch, much like healthcare has had to do over the last 5 years. They've been bringing in digital experts from outside, they've been bringing software experts, non-health people and real technologists and business people to come in and run exchanges, et cetera. Same thing's going to happen in commodities. Secondarily, hopefully, this creates a flywheel effect to the industry overall and has good social impact and environmental and sustainability impact on the planet, because with the ability to differentiate and create premiums off of their already existing commodities, that drives production level efficiencies. So if you have the ability to create a methane efficient or a carbon efficient or a water efficient product and generate a premium in the market off that, then what that does is it creates a flywheel effect for them to invest in those same areas of production, which then creates a better planet with less methane output, et cetera, right? Ag space. So we're hoping through positive business impact, or I'm personally hoping, I know our company is as well, that through positive business impact for these companies and giving them the ability to do this, that it creates a better planet at the same time.
I mean, that's exactly why we're doing this. I mean, he gave you our pitch right there. I think maybe from our industry specific, I think people are going to start looking at the data that they have more. They're already collecting the data. All of these oil and gas companies have this data because they're having to report on it on a monthly basis, their production profiles. And so I think they're going to start taking a stronger look at that, especially if they see an opportunity and a market behind it. I think they're just going to start taking a closer look at the data they already have and say, how can we do this better?
We'll see seed launch and physical delivery of cryptocurrencies being the dominant settlement mechanism, and you'll get some seed socks, which will be the next product to trade.
There you go.
All right, thanks guys. That's about all the time we got. Thank you.
Thank you.
Yeah.